Hey, what's going on, YouTube? This is TerrenceRe. Got another video update for you. How to invest like Warren Buffett, right? We're gonna get right to it. You've probably seen a lot of different. You probably seen someone say that, but then they tell you we'll just invest for the long term, but not give you specifics. I got the keys right here today. I'm going to show you how to invest like Warren Buffett. Literally, I'm going to show you how to do it for free. You ain't got to pay me nothing. And right now, the information I'm giving to you is free. I don't know how long it's going to stay free, but we're going to use it. So without any further ado, let's get to it. So why would you want to invest like Warren Buffett? First of all, well, Berkshire posts record operating profit, rising rates boost Buffett's return. So Berkshire Hathaway announces its earnings, does all of its earnings call or annual meeting or whatnot. They do it on the weekend, do it on Saturday. Everyone else, you would have seen it through the week. So this came out yesterday. And basically, Berkshire Hathaway on Saturday posted its highest ever quarterly operating profit, while gains from stock holdings helped the conglomerate led by billionaire Warren Buffett swing to a nearly $36 billion overall profit. Rising interest rates and better results at the Geico car insurer allowed Berkshire's insurance businesses to generate more money in the second quarter, with profit up 38% and interest and other investment income growing sixfold. So, what's the reason why I wanted to come on? I got something that I wanted to share with you. There's this website, and I'm getting ready to pull it up, where you can follow certain hedge funds, or people that you see come on pundits on CNBC. They may have, you can follow even like Kathy Wood. You can follow them. You can follow Warren Buffett. You can follow. I think Ray Dalio's fund is called Bridgewater, if I'm not mistaken. But you can follow them. You can do growth funds. All of these things are now possible, and you can do it on your own. So let's get right to it. I wanted to set that up. Warren Buffett made more money last quarter than, and they're saying that I guess he has Geico. He has some investments in some insurance companies. So let's go look and let's see and let's be sure about what he has. So I'm getting ready to X out of this. Of course, I got the chart pulled up. But before we look at the chart, let's go here. Now, the name of this app or this website is Ticker, Tikr. You see it right there. So if you just Google Ticker or go to ticker.com, Tikr.com, or just put it in and you pull it up. So when you come on, you can set up a free account. And when you go to the free account, let's see if I can, I need to go back. I don't want to do that. So once you go to the free account, you're going to come here, right? You go there, you put in your email, password, and you got a free. And for the free account, you can come on and you can set up a watch list. You can set up on here where it says track investing gurus. You can put on there, see where it says watch list. This is if I want to look to the left. If I wanted to set up a watch list, I could do it here. Track investing gurus, global screener. Come on here and click global screener. You can screener. I think I said screamer. You can put on market cap, revenues, free cash flow, um, forward PE, gross profit margin, and you can screen stocks here. You can and you can save the screens. You can go to company news, call transcripts. Let's see if they have Warren Buffett stuff. So I got Google News in here right now. Let's see. Let's take out Google. Let's see if we can put Berkshire in here and see what happens. There it go. I don't think it matters which one you use. I would think that Berkshire A, let's just see. All right. So it says update 3 Berkshire post record operating profit as rising rates boost Buffett's return. So there's the article I was just reading from, and it has everything on uh on Berkshire Hathaway, right? You can come to, let's see, detailed financials. Here's your financials if you're into that. Now all of this information, I don't have a paid account. My account isn't paid. This is free. So I'm showing you guys all of this so you can like, if you want to come and research that stuff, this is free. I'm sure there are some valuation. Let's see. I'm sure at some point they're gonna give you got multiples. I don't know, street targets. I think you gotta pay for this information right down here, but it got like a, let's see, competitors. So you can come on here and you can kind of mess around with it. But this to me, this isn't even the cool part. This is like a lot of that stuff that I don't really get into. This is the cool part. This is the part where you want to mark it in the video. Come to see on the left where it says track investing gurus. Click on track investing gurus, and here you go. You got your value funds, right? You got your aggressive growth and other, right? I guess other would be maybe a mix. But even when you say aggressive growth, here's ARK, which would be Kathy Wood. Here's Berkshire Hathaway over here under GARP. I do not know what GARP means. If you know what GARP means, you watching the video, put it down in the comment section, please. But it's not really important to me what it means, as much as if you want to follow them, you can click on it. And here's Tiger Global. Like, these are some of the ones that I know just from listening to CNBC. I'm gonna click on Berkshire Hathaway, and here we go. You can see what Mr. Buffett and Mr. Munger have the majority what they're invested in. You have Apple. Now Apple makes up, it says this holding is 46.87% of this portfolio. Shows you how many shares. Now this is as of their 13F filing type. So I don't know. It says holdings date. This was as of March 31st, 2023. So this could have changed, right? Because now today, this is what, 5 months ago, 4 or 5 months ago, a quarter ago, basically. But you see, he was invested in Apple, Bank of America, American Express, Coca-Cola, Chevron, Occidental. I remember him taking a big stake in Occidental. Kraft Heinz, Moody's, HPQ. Here's the ticker symbol of it, Citigroup. Seems like Mr. Buffett likes banks. Got some oil stocks in here. That's Chevron, Occidental, or energy. So energy, banks, American Express, I would consider that to be in the banking. I'm not sure if it's actually considered that, but I would consider it. Kroger, Paramount Global, Visa, American Express, MasterCard. So maybe he sees something in the banking sector, or is it just the rising interest rates? Duh. So rising interest rates, the Federal Reserve, the Fed is raising interest rates. So that's going to make us pay more interest on credit card debt. Banks should be doing well, as they are. So you can see that he's following that. He's an investor in Amazon. He likes Amazon, Capital One, another bank. And so you can see, so if you were one and you just wanted to, like, you see that Warren Buffett is doing, Berkshire is doing good, and you was like, hey, I want to follow that. You could come here and start buying some of these stocks. Man, the information and technology that we have now today, man, you could pretty much do a lot of things on your own, but you don't have to pay for the services. Now, if you got that much money and you like, look, I'd rather let someone else do it, then I understand it. But if you're just investing, you just willing to just wait it out, and you can see Now we can go, this is the top 25. We can go to next down to the next. Now there's 49 stocks in here, and you can see them all here. A Alley Financial, there's another financial. Let's see. So it's pretty easy to say that he's actually, and he has VOO, Vanguard 500 Index Fund, and the SPY, SP 500 ETF. He has a small stake in UPS. So you can see, let's go back to the global screener. No, excuse me, track investing gurus. And let's take a look at now more aggressive funds. So if you want to be more aggressive, obviously, let's take a look at ARK. So you click on ARK Investment Management. You see Tesla is number one. So you already see Coinbase, Roku, Block, formerly known as Square, Shopify, Zoom. So you can see these stocks are for the most part are growth stocks, right? I don't think any of these stocks that I'm just off the top of my head, I could be wrong, just in this top little 10 or so, I don't think any of these pay a dividend, right? As opposed to you go see the number one stock under Berkshire was Apple, which pays a dividend. And Apple kind of moves more so like a bond now, not big movements, but steady path up, and it's paying you a dividend to own it. So you see Roblox, Twilio, DraftKings, Teladoc. These are these funds. If they move, is gonna move. You'll make a lot of money, but when they're down, they're down. And so these are the differences in the two investment strategies. So let's now that we've seen that, and you guys can figure out basically, you can follow your favorite investor on your own. You don't need anybody's help. I'm gonna drop this and let's go look at the chart. We're gonna look at. I wasn't gonna look at ARK, but now let's look at ARK and let's look at Berkshire since we. Now this is a 10-year. This is a 10-year weekly, right? So I got 10 years and a weekly. Each candlestick is a week. Let's utilize the whole screen, and you can see. You're looking at this. This is Berkshire. You see, it had this little down move right here, but that came from COVID. This is the COVID move right here, and you can see it's been a steady march up. And you see we had another little down move here, and then you see it marching up again right up here to where now last week ended on Friday. You can see we kind of got like a what they would call an inverted hammer. And generally, when you get these hammers like this, you look at it as something that pushes the market up. That's generally how we see. Oh, excuse me, pushing the market down. This would be is because it's inverted, so it would be knocking the market down. That doesn't mean that it's gonna actually do it, but it's just to talk, just to give you what this candlestick would symbolize. And right here could be hitting a little bit of resistance because it's up here up against all-time highs. But who knows? After that, after Saturday and giving out those earnings, we could come in Monday morning. Now let's look at a daily chart. Could come in Monday morning and see Berkshire do something. Now this was on Friday. You see this engulfing red candle right here, and completely uh, engulfed the day before candle. So let's see. I'm not quite sure what we'll get on Monday, especially with that type of earnings, but we're due for a little correction anyway in Berkshire. Let's take a look at ARK just because I looked at it. You see ARK. ARK has already started its downward descent, but let's look at the 10-year weekly on ARK. Now you can see that on ARK, it's been beat up pretty bad. You can see when it was going up, it was going up. right? I mean, you can see from this down off the lows of the COVID lows from 34 all the way up to like 158. What is that, like 5x? 5x. So that's not bad. But when it's bad, it's bad. So you get a chance to decide what you wanna be in growth, or you wanna be something that's steady. You may not get the returns on to the upside, or you also won't get the losses to the downside. So those, but the main thing I wanted to talk to you guys about today was to show you how you can follow your favorite investor or your second favorite investor, right? Um, because I might be your favorite. You can come on here and watch me. I don't have the overall patience to sit through something like this. I ain't gonna sit through nothing like this, which is I know I don't understand why investors do sit through something like this. I don't understand why anybody sit through anything like this, because it's quite easy. After I see 1, 2, 3 weeks of my money going down, see a lot of those investors don't do technicals. So they looking at fundamentals, or they have like a belief that something is gonna go its way at a certain point in time, and they have enough money to sit through it. I don't have that belief, and I don't have their money to sit and wait. So I won't. Once I get 1 or 2 of these, I'm out. I'm looking for something else that's going up. There's always something that's going up that you can buy. So you don't have to sit through this. And in my personal opinion, I just think that I don't I would like to see the research. Now, to ARC's credit, you can go and look at their research and what they're actually into. Let's see. I'll pull it up for you, because I'm almost certain we can I had it up here because I would come look at and read over what they have a website where you can. I don't have it pulled. Yeah, I do. Research Center. I'm going right to it. See right here. So ARC dash invest.com, and you come here, ARK Invest Research Center. You can subscribe. They'll send you information. ARK's expected value for Tesla in 2027, 2,000 per share. I'll do another video on that. But you can see right here, and you can see she's very transparent with why they're doing things. They actually ARK's expected value for Roku in 2026, $605 per share. So my thing is this though. If you're going to to look at these dates. Now, whatever happened in between these dates, you got to be able to sit through. That's a lot of drawdown, in my opinion, to sit through. But so there it is. Hey guys, hit that like button, hit the subscribe button, help get me up in the algorithms. I try to come on and give you good information that's actionable. It's free. And just today, if you didn't know, now I've shown you how you can follow some of your favorite investors, how you can get research for free. This is stuff that the technology is out there. I'm not selling no course, no, trying to, no $1,000 course, no, whatever. It's for free information. A lot of this stuff, you should be able to come on and get for yourself. All I ask is that you hit that like button, hit the subscribe button, and share the video. With that, guys, I'm out. Peace.